All right. You covered tariffs quite extensively already, but I thought, as it is a hot topic, we kick it off. So maybe from a more active trading point of view, sort of how is it affecting currently your investment strategy and the investment landscape in general?
Thinking long term, I don't think it affects it that much. I think it brought a lot of expected volatility because Trump is a pro-volatility president. And I think that looking at his first term, he brought a lot of buying opportunities as market got afraid what he was saying. And I think it's the same in the second term as well. If market dips because of something what Trump says, it's more of a buying opportunity than a selling opportunity.
Yeah, I agree completely. And I have to admit, we were rocked a bit by the Liberation Day. We did very well in our fund, but that was partly luck, I have to admit. But I agree with you completely. Whenever Trump does these things, you have to remember that he's a U-turn president, in my opinion. He's done almost nothing but U-turns. He, as I mentioned initially, he wanted this was going to be a golden age. We're firing on all cylinders. Then a complete U-turn. We're going to solve the deficit by cutting costs. Then a complete U-turn. Now we're going to solve the deficit by outgrowing again. And the same on tariffs. You know, everyone was in shock. We're going to have 5% inflation. And then he just postponed it. So in my opinion, you often hear, at least in Danish media, I don't know if it's like that in Finland, but you often hear the analysis that Trump doesn't want to lose, so he'll stick to his position. Well, no, he does one U-turn after the other. He doesn't care that he doesn't get his. He adapts very, very quickly to whenever things aren't working. He has very, very low stamina, you could say, in his decisions, and that's just something to keep in mind. That whenever he says something crazy, does something that disrupts markets, he's probably going to do a U-turn in a couple of days.
So Trump is the biggest wild card in terms of a macro point of view. How can one actually somehow adjust their investment strategy to sort of hedge against this? Or monetize on it?
For me, we very quickly realized that it's very, very tough to make bets on Trump. We try to make our investment decision based on our data models, and our data models, they don't know what Trump is doing. They have no clue. So that's not our game. So don't try and guess that. Don't try and front run that. You can try to be a little bit quantitative in it. We currently have a bet in copper, to be very transparent. Both because we see a decent demand picture in our models, but also because we try and calculate the sort of the risk premium, sort of the difference between the physical market and the futures markets in copper. That's pointing towards an expected 10% tariff, and we think that might be higher. So that's a way of making it a little bit more substantiated than simply guessing on which direction he goes. But again, view it as buying opportunities. I agree completely with that. Whenever these things happen, because there's nothing. Usually, if the stock was good yesterday, it's going to be good tomorrow as well, and then by then we might have a complete U-turn.
Yeah, and I would say I view Trump more as a reality TV character, someone who wants to be in the spotlight, someone who wants to be in the headlines of the news, and like you said, he's making U-turns like every week. I would pay more attention to the Treasury Secretary Scott Bessent because he sort of seems to have a plan that he's trying to stick to, though Trump doesn't make it too easy for him. But he seems like a sensible person from a macro background, which I like a lot. Because, for example, the former Treasury Secretary Yellen, I was not a fan, but I would say I'm a fan of Bessent, and I think also the stock market has become a little bit of a fan because he calms the markets down and makes them go up.
Yeah, I should have brought that chart. Some of you may have seen it in our show. Someone did an analysis of how often are Scott Bessent and Howard Lutnick mentioned in the news. And then they correlated that with the S&P 500. And it's a massive difference. Whenever Scott Bessent is in the news, stocks go up. Whenever Howard Lutnick is in the news, investors don't like that. So you can actually see that event. If you follow the news, as long as Scott Bessent is in charge, we can stay relatively calm. I agree with you completely.
All right, to wrap up this tariff topic, how will this play out? Is this a win for the US? What about the EU from China's point of view?
A lot of damage has been done, and it's hard to be. It's going to be hard to sell this as a win for the US. Trump is going to try to. He's going to say we've made a couple of deals. He may get some adjustments of some. But at the end of the day, it's. I think it's really hard to point to a winner. To be completely honest, I don't know what you think.
I think that if you're an American company, you're really thinking about your supply chains now, and you want to bring them home. And if you have investments that you're deciding on, if you want to do them in Asia, Europe, or US, maybe that has tipped the scale for US what has happened. So I think it's at least a bit of tailwind for the investments in the US, at least in the mid to long term.
Yeah, you actually already touched upon the next question, which is that there has been a lot of discussions of bringing production back to the US, sort of revitalizing the rustic belt. How realistic do you think this is, especially with a strong dollar?
Yeah, actually the dollar has been going down now, so that's basically a good thing for US exports. So if the dollar goes down, I don't know if it was Andreas or someone else that I follow in macro who said that if the dollar falls by 30%, that actually solves a majority of the problem that US has with the trade deficit. So that will be actually a good thing for Americans and their own manufacturing. And I think that they should bring home only the high-end manufacturing, not the sneakers, but the high-end, and of course all those critical like semiconductors, pharmaceuticals, things that they really need to have produced within their own borders.
Yeah, absolutely. I think if that production returns to the US, it's going to be robots doing the jobs. So it's not going to be human jobs. And that leads me to another point. Sorry, I'm digressing a little bit here. If it's robots doing all that work, fair enough, it's going on in the US, but what's the point? You can't tax a robot. It's not going to bring in. It's not going to solve the deficit. Where are you going to get that tax from? And I think that's one of the points. If you're trying to understand or try to create some positive spin on this, is that in this digitized world where we're all getting replaced by robots or AI, the one thing that you can tax is physical goods moving across borders. So putting a tax on that, I think, makes a lot of sense logically. The way they have gone about implementing it is horrendous and stupid, but there are some logics to that. And the way that they've managed to bring down the dollar, I think the Chinese are probably even on board with that. It could be part of the deal with China as well. Is solving the problem a lot more than the tariffs.
I agree. There's a point in that, and if they would have done something like 10%, that would have probably made the market go up, because when Trump started speaking and market got a hint that maybe he's talking about just the 10% and nothing more, market actually went up a few percentage points before the dive started. So actually 10% would have been good. I think from the perspective of the U.S. economy and even the trade balances.
Yes, and I think what the market is after also is, let's just get this done. Let's know what we're dealing with. If it's 10%, okay, we'll work around that. We'll get moving from there. Markets can adjust to almost anything, but we just need to know what it is. So these constant postponements it's not very good for markets. I think at some point the markets say, okay, we're going to get postponements, whatever deals we're just to stuff. But getting a deal done with China would alleviate a lot of pressure and probably be really good for equities.
Yeah, it's actually quite funny because we're like 2.5 percentage points away from the all-time high in S&P 500, and we don't have any major trade deals, not with Eurozone, not with China, and imagine what would happen if we get a major deal.
Yeah, exactly. But again, it's like that's also a point to how to understand Trump, because I think when we had the Liberation Day, we all thought, okay, this is a massive crisis. We need a very clear solution to this, to fix this. But what's happened is that it's sort of fizzled out. Where is the trade crisis right now? It's not necessarily in equities. It's not necessarily in inflation. It's sort of fizzled out, both because Trump did U-turns, but also because markets So okay, we're on to the next topics now. But I agree with you completely. There's still a bit of a hike possible with some of these trade deals, just to get this done and get moving along for that.
Yeah, I was actually expecting, because all the uncertainty that was in the media and in talks of people, and also what we heard from the companies, that the macro data would have been worse in April, in May, but it hasn't been.
No.
And I think that since it didn't go down even that much that I expected, it more has upside from now on.
I agree completely. Also because I expected the same. Also because we know there was a lot of front loading in February and March, a lot of purchases of goods that count as economic activity, even though it really isn't. So I expected sort of a technical drop in April, May. I haven't really seen that. The job market is doing okay. Growth is doing okay. Inflation is more or less under control. We might have some inflation pressures over the summer, but it's, yeah.
What about interest rates? In order to facilitate this type of investment, it would be beneficial to have a lower interest rate, but at least based on the past few weeks, there doesn't seem to be any demand for the bonds.
No, and that's the thing, especially with what's happening in Japan, and that's the final part of Besant's trifecta there. Lower oil prices, lower dollar, he got those. But then what about the interest rates? And that's going to be the tough one. I don't know how they're going to pull that off. It seemed to me that when we had the turmoil in the week after Liberation Day, as long as it was panic on the stock markets, Trump was relatively cool about that. Okay, we have to stomach that. Once it started entering the bond markets, things became real, and he called in Scott Bessent, or Scott Bessent called him in, or whatever, and they did the postponement. So I think they're very, very acutely aware of the bond market and the political, because that's where you move from this being a stock crisis to a financial crisis. So I think they're very aware of that, and it's I really don't know how they're going to bring down those rates, especially with the big beautiful bill coming up. That's not doing anything to instill trust in the U.S. government's ability to pay back the money, the debt. So yeah.
Yeah, but if you zoom out and look at the rates now, they're like 4.5 10-year, 5% 30-year, and if you like take the last 50 years, we are basically below the average.
Yeah.
And if you look at the real growth in the US, 2% more, inflation 2% more, so we get to like 4.5%. To almost 5% if the growth rates accelerate. So basically, it's 5% interest rate. It's not that.
That's a fair point.
There's a slight difference though. The national debt has ballooned significantly. Therefore, the 5% becomes a little bit more of an issue in terms of.
It is an issue from that perspective, that you really have to pay a lot of interest, and I think it's like 13% of the budget. The highest it has ever been, and if you look at the steepness of the interest payments, it's something that you really have to worry about. And I think that Besant really wanted to push down the yields, but has not managed to do it yet. And I don't know what's the vehicle to do that. I
mean, at some point it could be AI, productivity gains from that. But that is a long shot for current administration to gamble everything on. That we're going to have those. I mean, we are probably going to see those productivity gains, but are they going to spill over into the federal budget? That's my point again. Is this taxable? When AI and robots take over our jobs, how do we tax that? How does the government generate income from that? So there are a lot of unanswered questions in that.
On a more general note regarding the yields, we saw the Japanese bond market basically skyrocketing, the highest debt to GDP ratio in the world as far as I know. Does this have sort of ripple effects because the yen carry-on trade has been sort of wiped out?
Yeah, we live in a multipolar world, which means that everything affects everything. And if you look at Japan, Japanese are actually the largest holders of US treasuries. So of course, if their interest rates are skyrocketing, then the local investors might switch the US treasuries to the local bonds because they don't have the currency risk then, and maybe they feel that that's more safer than the US at least as of now. So everything affects everything, and I think that there's also a big influence when it comes to just the flows and what investors, macro investors, hedge funds, large institutions are doing, which you can see from the prices.
Yeah, I agree. We'll probably be feeling that in Europe as well. And our bond markets, Japanese have bought a lot of Danish, both mortgage bonds and government bonds. So that is a very big issue, very overlooked, I think, especially in Europe.
All right, so what is the current macro outlook? Bearish, bullish? Are we going to go up or down?
Well, in my opinion, we're past this trade war, this tariffs debacle. I'm still relatively positive about the geopolitical risk going down. I don't think we're going to have major wars there. More liquidity into the markets. I'm relatively bullish for the coming period, especially in crypto. I don't know how you see it.
Actually, the same way. Well, we should disagree more, but it seems that we are on the same page here. Yes, definitely liquidity is going up. Yeah. M2 is at all-time highs again. Always positive for risk assets. And even with the new US government, I don't see that the growth rates would decline. And now with the European big, beautiful bills that we are getting, so I think that there's a really good chance of really starting to see the acceleration in the growth actually on both sides of the Atlantic.
Yeah, the big question is obviously how the inflation picture affects the Fed if we can get a cut or two. Trump is very, very eager to get some cuts, obviously. The inflation, and I think so far they've been very, very hesitant because of the uncertainty around tariffs, and also because if the Fed had gone out in April and did a cut, it would have been, we used the phrase sane washing the tariffs, because they would have sort of supported the economy while Trump was doing the tariffs and said, you have to fix the tariffs thing yourself, and then we can look at cuts. So that could strengthen the case if there's room for a cut in the fall. Yeah,
actually, one thought about that, because I think it's now less than a year when Powell gets replaced. Yeah. And the closer we get it, let's say we're only 6 months away from that, and Trump nominates the next Fed chair. So basically the market starts discounting maybe the rhetoric of the new chair already 6 months before he takes office, because he's a de facto Fed chair. So I think that we're not many months away from that, and I think that if market sees that there's someone who's promising to take the rates lower, that's also a tailwind for the markets.
Yeah, and you will have to make that promise to become chair, I think, if he doesn't elect one of his sons, probably, but I don't know, we'll see.
Well, that's not totally out of the picture.
You don't know.
All right, so despite all the macro uncertainty, both seem to be quite bullish.
Yeah, I am. And I also laid out the case why I'm very, very bullish on crypto, both short-term and long-term. I think it's more and more people around Europe and the US and the world are waking up to crypto. I know some of you have probably been in crypto for decades, but it's becoming much more mainstream, much more. Yeah, I think so. It's become much easier for people to invest. We have like MicroStrategy, all these selling essentially convenience bets, as we talked about earlier.
We'll get there.
Yeah.
Before that, do you think that the sort of dollar position as the global reserve currency might be even threatened by Bitcoin as an alternative one?
No, I think you're going to see some, you could call it diversification. I think some countries and some holders are going to diversify, but still I don't really see a true alternative to the dollar as a global reserve currency. People talk about the yuan, the BRICS currency, but like it doesn't really have the characteristics needed to be a true reserve currency. It's still too opaque what goes on in Beijing, etc. So no, I don't really see it, but we will see some diversifications. People are gonna, instead of holding dollars, they're probably gonna try and hold bitcoins, etc., and gold. So yeah.
Yeah, definitely. If you talk about institutions or governments, what they're doing, that's diversification is the word. You probably all seen the picture where you have all the different asset classes, how many 100 trillions real estate is, how many 100 trillions bonds are, and the small in corner is 2 trillion in Bitcoin. Yeah. So diversification from those huge asset classes just small amounts. If it's the 1 or 2% that BlackRock says you should diversify or more, but if it starts flowing that way, it has huge precautions for Bitcoin and I think all the other cryptocurrencies as well. And what's happening regulation-wise, that's something that I always was very skeptical before about Bitcoin and other crypto, because there was that tail risk, as you mentioned, that it might get blocked or somehow put down. But now, as the US government is embracing it and really allowing the financial institutions, the traditional finance institutions, really to start offering and bring it mainstream, I think it sort of starts a new regulation in crypto that we haven't yet seen.
So you think Bitcoin has sort of solidified its position as sort of a macro hedge, and ETFs has kind of validated this and made it more acceptable for institutional investors to participate?
Yeah, I think that the ETF moment was a watershed moment, and that happened during Biden administration. That was very negative on crypto. So that really paints the picture what was going to happen. But I think that the new Trump administration just accelerates the process that was inevitable.
Yeah, I agree completely. As I mentioned, I think the whole Trump coin thing was very, very bad for crypto, very, very bad showing. But let's forget that. That was a parenthesis in the history of crypto, I should hope. So absolutely, I think it's becoming much more convenient for people. It's becoming much easier. Money is flowing into it. So it's definitely the case.
Yeah, I think that the scarcity will be proven now going forward. Because really, if you think about investing in the US 10-year bonds, if you did that 10 years ago, you lost purchasing power during your investment. And really the scarcity, especially in the Bitcoin, is so evident because really 20 million has been mined already, 1 million to go during the next over 100 years. So the scarcity is real. And really, if you get this institutional backing, governmental backing, the money flows should be so high that you can imagine what happens to the demand-supply balance.
So you're expecting a supply shock, sort of?
I am, because now that the regulation in the US starts passing, with Genius Act and the next bills that are coming, and even the largest institutions, we actually saw already JP Morgan, and Jamie Dimon has been very negative also on crypto, now saying that, okay, we will allow you to buy it through our bank, even though I wouldn't suggest it, but we will allow it from now on. So the tide is turning, yeah.
Absolutely, and I think banks will have to move in that direction. They've been fighting all they can against crypto because they didn't make any money from it. But it's a non-starter for them. People are just moving the money outside of the banks if they don't offer it. So there's no way around it really for them. And that's obviously also a big boost.
What do you guys think about this new trend where publicly listed companies are buying Bitcoin as part of their reserve strategy? You have the pure sort of just Bitcoin, and there's no other business model behind it, which is similar to strategy. But you also have companies like Semler Scientific doing something similar with Ethereum, and the FDB doing the same thing with Solana. Are we just going to see a bunch of public companies buying all the different cryptos?
Yes, I think so, because in my opinion, it's purely a convenience bet. I mean, you're selling convenience to the investors, both in terms of you can buy it on your local platform, whatever you use, but also in terms of it makes things easier from a taxation perspective in many. That's very important in Denmark, I know. It's much easier to tell your accountant that you bought a stock than telling that you bought crypto. So I'm still trying to wrap my head around whether it's good or bad for crypto, but it's making it a lot more convenient for people to buy. That means it's a good business model. It's always good to be selling convenience. And yeah, it's driving money into crypto in any case, I think.
Yeah, we know the return history of Bitcoin and other major cryptocurrencies. So it's hard to say that it has not been a good investment. No. And I think that the track record, as it starts every year getting 1 year longer and longer, it starts to really become more mainstream and understandable, and the track record doesn't really hurt.
No.
You as a more active trader, how actively are you looking at the sort of premium? So I think Micro is trading somewhere around 2 to 3 times the net asset value of the Bitcoin holdings. Is this interesting? Do you have some logical explanation for the premium?
That is very interesting phenomena. And you see from Japan, Metaplanet trades like 5 times the MNAV. First, I was thinking that that's sort of a bubble, but since I've been following what MicroStrategy has been doing for the past, especially during the past 6 months, and how they have been able to really sell their shares at a premium, and also do all those other financial instruments that really seem to have a lot of investor demand, and not just investor demand, but institutional investor demand, and that they can really do accretive dilution that's like almost never heard before.
Yeah, I agree. And you shouldn't underestimate the taxation thing. And I mentioned it before. In Denmark, the government has proposed to pay, I think it's called unrealized gains tax on crypto, which is as anti-crypto as you can go, especially because it's calculating backwards as well. And so in countries like that, where you don't have a crypto-friendly government, it's going to be much more attractive to buy stock than to buy crypto from a taxation perspective. So if nothing else, that creates a very good case for it.
Do you see any risk with this? Because now we see these companies popping up left and right, deploying different type of debt instruments to buy more crypto. Could this build up some kind of systematic risk?
It could build up some bubbles. That's obviously the risk, and the risk that they become very, very big in certain coins. But I think it could turn out to be bubbles. Some of them, they could fall, that could have spillovers. And you need to have the stomach for that when investing in crypto. If you've been in crypto for many years, you know you need the stomach for that. It's an early market. Things are going to go wrong. You're going to have crashes and scams, whatever. Okay, that's part of it. You've got to have a stomach for that.
Yeah, I don't think it's going to be systematic.
No.
They're quite small. And as long as they don't deploy too much leverage, which I don't think they are currently doing, for example, MicroStrategy has like 20% debt. So it's not too leveraged at the moment. The only thing that can happen is that the MNAV goes closer to zero, or maybe if there's the downturn in crypto, maybe for a short while also below 1.
Yeah, and they have very lenient conversion provisions with the note, so you could theoretically just switch it back to shares.
Yeah. I don't think there's anything systematic with those, at least as of now.
No.
All right. Well, crypto has a tendency to sort of get over its skis, so we'll see how it turns out.
Yeah. We're waiting for the banana zone.
Yeah. Raul promised the banana zone.
Yeah. I hope it's coming. Let's see.
But you mentioned stablecoins previously. Mm-hmm. Do you see that sort of as the first and most obvious product market fit that crypto has found? Because it seems like a relatively good use case. Yeah,
I think so. That makes a lot of sense, and it's a lot of money driving into that. I think it's I think so. Personally, I have to say I'm mostly impressed by the potential use cases for blockchains. I've really been opening my eyes for that over the past few months. I think it's much closer than many people think. So in my opinion, that's the biggest case right now. But yeah.
Yeah, I think that the Genius Act has passed in the House, and now we're expecting when it will pass in the Senate. I think the biggest backer, Cynthia Lummis, said last week that she's hoping that it will pass this week. So let's see, or if it takes longer, but maybe, hopefully, before the summer recess in the Congress. So that's one step closer, again, to get in some regulatory
support.
Yeah, exactly. Yeah. Thank you.
And you can definitely see that there's demand for this type of products, because we had the Circle IPO recently, way oversubscribed, skyrocketing. They had to stop the trading for this. But are you actively looking at this type of opportunities?
Yeah. I was looking at it, and since it had such big gap up, I was too afraid to push the button. But now you can say, in hindsight, that you should have, because it has gone at least doubled since the first day of trading last week.
Do you think it's still a value play?
I have been looking more at Tether and not that much at Circle, so I don't know about the valuation so much, but at least I know that it's now valued a little bit over 10 billion. So
and I think the net profits are around 300-400 million, maybe something along those.
Yeah, but I think that if the Genius Act gets passed and the U.S. government gets what it wants, so that Scott Bessent, I think, has talked about getting like $2 trillion invested in stablecoins and through those to U.S. treasuries. That's the end goal for the government from their perspective. So I think if the growth is like that, I think Circle and Tether would be both good plays. Of course, Tether you cannot invest in straight in the stock.
At least not yet. But you mentioned previously that the whole market cap of the crypto space in general is still quite insignificant. And if you do a relative valuation model between, let's say, Bitcoin and gold, we're still, what, a fifth, a sixth of the value of gold? Even less, I would say. Do you see that there's other use cases for blockchains that have an even bigger total addressable market?
Yeah, I think that when crypto really goes mainstream during the next 5 years, there will be definitely better options than Bitcoin, because it's already 2 trillion. So the smaller ones will have higher percentage gains, but it's always so hard to pick the winner out of those. Yeah. For example, of course, one beneficiary, the second largest crypto, is Ethereum. So if you get those stable coins passed, most of those transact over the Ethereum network. So I think that ETH could be a good play, especially now if the Genius Act passes.
Yeah, I agree completely. I think ETH has been quite slow over the past year or two, but there's lots of potential. Also, the entire, I'm not going to go into the payment systems again, but that is a $1 trillion industry, much of it. The potential tokenization built on Ethereum, so absolutely a good case.
Yeah, and I think Larry Fink from BlackRock sort of made also a U-turn where he's now suddenly talking about tokenizing all securities. Yeah. What's sort of the potential with this type of stuff?
That's, I mean, what's the proof of that? I don't even know. It's immense also because it would be the ultimate hero case for crypto to solve that. Then you can use it for all sorts of things. So it is probably the next big step in this journey. And once you have that in place, you have an entire use case as a second to the Bitcoin case. So it's really, really excited.
Yeah,
I don't know the number. It's trillions.
Yeah, it's if you think about the whole like current financial system, it's so antiquated that there really needs to be a huge reform to get it up to like 2020 standard, and I think that the clearest option is blockchain at the moment.
Absolutely, and cheapest.
Yeah, and that would probably bring a lot of efficiencies to the, let's say, securities marketplace, because if you look at the current T+1, T+2 type of settlement, with cryptos, the markets are 24/7, instant settlement. And then, of course, once you have the sort of DeFi ecosystem where you can start collateralizing it, etc., yeah, it opens up a completely new landscape of investing.
Yeah, that was this quite funny story, this T1, T2 settlement date, because now that US moved from T2 to T1, I actually had a problem because now I was selling stock from the other settlement date and buying them from the other settlement date. So actually my brokerage account was a deficit at that time, and there was a huge problem with the broker, because they were, okay, I haven't encountered this before, that this could happen, but it brought like a new layer of difficulty that even that was better that US moved to T+1 from the European standard that is T+2 currently.
All right, guys, what are you most bullish on in crypto?
I'm not an expert on these coins, but I like to listen to Raoul on these matters, and he's big on SUI, so that's probably a good bet. Probably also Ethereum for me.
So then I will choose Bitcoin because it's the safest bet.
All right.
I agree.
I think we have a little bit of time for some audience questions. Guys, you'll take the questions. I'll just pass along the mic.
Yeah, fair enough.
All right, all the way to the back.
Thank you very much. Very insightful conversation, and as sand is dropping off my shoes, regards from Dubai. The last, for sure, 6 months, there hasn't been an event taking place without touching the topic of RWA, real-world assets. And then we have this case with Mantra Chain getting together with Damak, one of the biggest property entities in the UAE, and the land department of UAE getting together. And we know how that ended, very poorly. So I would like to hear a Nordic view on where are we, in your opinion, with RWAs? Is that the way forward? And especially for you guys, because I know, Martin, I would love to hear your take on this as well. Because all of a sudden we are facing an issue with the legislation and the regulatory frames as not prohibiting or allowing us to do the tokenization of real-world assets, for instance, when it comes to flats and apartments and housing, in the way that we all thought that, of course, it's black and white, straightforward, let's do it. So is that something Nordics, for instance, could lead, maybe even Europe, changing the game totally, because we've kind of missed the train so far, and everyone still today is asking, even when Martin was visiting Dubai, where is Finland, where is Nordics? You guys, you do this, you are the IT gurus, but we don't see you in this space. But RWAs, truly, where are we with that? Your take on that?
It's not going to be Denmark, I have to say. I still don't know a lot of people in the Danish Ministry of Taxation and Finance. Those two ministries, I worked in both places. They are decades behind on crypto. So I mean, the potential is so huge, but there's no, at least in Denmark, let me just speak for that, there's no political interest in it. The bureaucratic system has no interest in it, even though it would solve so many problems. We spent billions of kroner on the what's called tinglysning, like essentially the what this would solve, and it's I'm not very positive about the Nordics being front runners in this. I don't know how you see that.
I think that you are the best to answer this question, so I'll leave the floor to you.
Oh, thank you so much. I mean, there's a couple of obvious use cases. For example, tokenization of gold, which has already happened, which would make gold instantly movable, tradable, easier to move around, etc. The other one that was just mentioned is tokenization of, for example, real estate. So regardless of your amount of capital that you can invest, you could actually benefit from the real estate market and the gains that you can get there. But to be honest, from a European point of view, this is falls under the current MiCA regulation that kicked in beginning of this year. Everyone is applying for their licenses, and there's basically 3 categories. And Patrick, put up your hand if I get this wrong. But all the exchanges, etc., fall under the CASP, so crypto asset service providers. And then there's a separate category called ARTS, asset referral tokens. And this is sort of where most of the RWAs would most likely fall. And that's not an easy license to get. So it's quite burdensome from a compliance point of view, and it puts a heavy burden also on the balance sheet. So I don't see Finland or the Europe in general leading in this sector of the crypto markets. But huge potential, and basically anything could be tokenized.
So we were at least good in regulating it again.
Oh yeah, we definitely regulated the shit out of it. So
Absolutely, yeah.
Do we have any other questions? All right.
Hi, and a very easy question and no hard feelings if you get it wrong. What's your estimate on the Bitcoin top on this cycle?
Do you want to go first?
Okay.
I can go over on
Yeah.
that.
That is a good question because the question is this cycle going to be the same? Now that we have the institutions, the governments going along at the end of this cycle, let's say in terms of time, because this cycle is coming to an end anyway, if it's the same kind than the previous cycles. So it really you have to play it by ear, because now if you get all these regulations passed, if we get like a huge banana zone ascent during the next 6 months, then I would say that the top is in, and then we have the bear market as in the previous cycles. But if it drags on and it takes longer, and we see the governments and the institution coming aboard like little by little, I think it might break the cycle as we have known it thus far.
Yeah, I agree. There's a great potential for that. I think there's a lot of thin air. If we go above 110, I think we could go to 150. I think I usually gauge these things by like when is my taxi driver telling me to buy Bitcoin? Then we're probably near the top, and he's not even talking about crypto yet. But we're getting there. So we're getting to the phase where more and more people are getting interested in this cycle. Hopefully we're entering sort of a FOMO zone that will drive it up, and then when you read it on the legacy newspapers, then it's time to...
So wait, Mikko said 150. Did we get a number from you?
Yeah, I will put my base case, which is quite neutral, not bullish at all, but base case, 3x in 3 years, 5x in 5 years.
Yeah.
Okay, so we're somewhere around 500,000.
Yeah.
I mean, that's relatively conservative if you compare with the crypto bulls.
Yeah, I know, but I prefer to be a little bit skeptical about that. Yeah.
I don't know if you remember what was Van X prediction by end of this decade or next.
Yeah, but
I think it was like
now
1 trillion.
when it starts going, it's going to be it might be exponential afterwards. Yeah.
Yeah, and we're definitely sort of, if you look at the historical cycles, seems like we might be breaking out of it with the whole institutional capital inflows. Bitcoin went on a little bit of an overdrive, pulled back, and now we're supposed to be at the end of the cycle, but we just made new all-time highs, and I'm not reading too many articles about it in the newspapers. So
that's why I'm not too concerned yet at this top that this would be the top of the cycle, because there hasn't been that FOMO effect yet.
Yep, and this is by no means no financial advice, as the disclaimers needs to always be put there. Do we have any further questions? All right. Kumpi ottaa?
How do you see what are the biggest threats or risks for Bitcoin? I mean, it seems like so obvious bet, but there has to be some risk. So what do you think?
Well, there's always the risk that we get too many of these FTX, like these crashes or scam stories that pull sort of the air out of the bubble. But that's a short-term thing. Long-term, new technologies. I mean, 5 years ago, no one was talking about AI, or very few. Who knows if there'll be something else in 5 years that completely disrupts this. We're talking quantum computing. At one point, people were talking about, the quantum computers are going to decrypt Bitcoin. But encryption follows along, so I don't see that. But there might be some technologies that we're not even aware of that might move these use cases to that. That's always the risk with technology.
Yeah, I think that now that the governments are involved and there's price appreciation because of what's happening in the US, maybe the biggest short-term risk is the regulatory thing, what happens in the US. If these things start to get blocked, they don't go through, I think short-term that might actually trigger the bear cycle. But longer term, if you talk about Bitcoin, I think that the biggest risk is that something is developed that is technologically so much better and sort of takes Bitcoin's place as a better alternative. That's long term.
I'll give my sort of bearish take on this. Long term, in my opinion, the biggest challenge will be the security budget issue. So currently the security of the protocol is subsidized by the block rewards, which are getting cut in half every 4 years, the legendary halvening, which is sort of as also the timing of all the markets, historically at least. But in order for the security to maintain as high as it is currently and the blockchain to be secure, theoretically the price would have to double every 4 years because the block subsidy is getting cut in half. So unless this problem gets somehow solved with bringing up the fees, I mean, this is a bearish case in the next decade, 2 or maybe even 3 decades, so nothing to worry about at this time, but I think the security budget and maintaining the security of the ledger is, yeah, that's a big one. Any other questions?
Hi. This is maybe for Martin, I think. What kind of challenges, effects that exchanges have maybe one of the fewest, if not the fewest, amounts of bitcoins right now, what they are possessing, and what kind of effects that kind of situation has for the exchanges to work and to go. I mean, if retail awakes, usually retail there needs to be someone to sell for the retail.
I mean, at least in Europe, according to the regulation, and I would assume, and I hope with all the other global exchanges as well, that the retail assets are segregated. So as long as we have the Bitcoin, that's sort of positive. And this is also sort of playing into your supply shock point earlier, is that if you look at the amount of Bitcoin that is currently sitting on exchanges, so this is basically customer assets that are segregated in the vaults and cold ledgers, etc. Yeah, not an issue, but let's say if your question is sort of along the lines that will we run out of Bitcoin at some point? But yeah, that would be a positive problem, because then the price would go up significantly. But I think there's the crypto markets have also become much more efficient. So there's always sellers at certain points, especially once you start reaching the new all-time highs, and you have a lot of market makers that are facilitating the liquidity of the marketplace, active traders, etc. So probably not an issue. Do we have any other questions? We could do 1 or 2 more. All the way back. God damn it. Come on, front row.
Thanks a lot. Thanks for the insightful panel discussion. I have one question regarding Bitcoin-backed lending. During the Bitcoin summit in the US, Jack Mallers, the CEO of Strike, a Bitcoin treasury company, announced that I think like single-digit Bitcoin-backed lending is going to be possible quite soon. So how do you see the future, let's say in like 1 to 3 to 5 years time frame, of how Bitcoin-backed lending using Bitcoin as collateral for your money is going to develop, maybe in Europe? Yeah.
In Europe? let's say overall, I think that's a positive trend, but always when you take leverage, it's always a two-edged sword. So some people go broke because of the leverage, because there's always people that they take too much on leverage. And when you're talking about volatile asset class like Bitcoin and cryptos, there's always going to be problems with that. But I think overall that's a good development. That also, as the volatility of the Bitcoin decreases, that becomes more favorable in terms from banks' perspective as well. And I think that there's good to be trendsetters like Jack Mallers that's making that happen and almost like forcing the bigger banks to follow suit.
Yeah, I agree. I think all banks must be looking into this at this point. I think it's going to be a slow implementation of it over the next decade, but yeah, the potential is huge. Very positive case. I agree.
Yeah, and in crypto lending in general, it's always over-collateralized. So from a bank's point of view, this is probably the best risk return type of profile that you can find, that you have, let's say, 150 to 200% collateral, and you're making 10 to 15% yield on it. So I think it's definitely an interesting business opportunity, well, whether it's crypto players or the banks themselves that do this. But yeah, definitely. Where I see a little bit of a challenge, of course, is that if you have a non-custodial asset, how are you ever going to create sort of a credit market and do under-collateralized lending? But as long as Bitcoin price goes up, theoretically you could borrow your sort of regular spending against your assets forever. Not financial advice again, and we're going to definitely have a pullback in the market.
But there's still some way to go. One very specific case for our hedge fund, we needed an insurance company because you need that for your license in Denmark. Kind of like a lawyer has an insurance for malpractice. So we went to a lot of insurance companies, and we went to major European ones, their office in Copenhagen, and they just had one question. Say, okay, we can do that. We set a price. Do you guys do any crypto? And I said, no, but we might in the future. And they said, stop at no, because if you do any crypto, you're not going to get any insurance from us. So that is still a big issue in that space, that the entire insurance sector needs to come to terms with crypto as well. And that's going to hold back some of these innovations a lot.
Yeah, and definitely there are some opportunities. There's already some insurance companies that are specifically looking at insuring whether it's taking, slashing risk, or whatever crypto related, and that's probably going to emerge a lot of new insurance companies.
Yeah, hopefully.
All right, we're going to do one final question so that the pizza doesn't get cold. Who wants to do the last question? All right.
Kiitos. Cryptos were supposed to be, or predicted to be, a safe haven or safe harbor, and obviously it's not the case, or at least not completely. And why might that be so?
If I understand you correctly, you're referring to Bitcoin being and crypto being government-backed and government-run. Is that your phrasing, or?
Or more so related to being an inflation hedge? Yeah, I think it's that was the original hypothesis, which probably hasn't played out that well. The correlation with risk asset has been sort of one-to-one, pretty much. But theoretically, if we break this correlation cycle, then that decoupling could lead to sort of more inflation hedge type of asset.
Yeah, I think Bitcoin and cryptos are still nascent asset class in terms of what they have potential to become. And therefore it's still seen as a very risky asset class. But I think that will change over time. And there are already examples of that. For example, if you remember, that was 2023 March, the banking crisis, the mini banking crisis in the US. That's actually when cryptos went up a lot as other risk assets went down. So there was like one very good example when it was seen as a sort of a safe haven in that environment.
Yeah, I agree. I think we are beginning to see trends in that direction, the decoupling you were talking about. But it's been taking longer than expected. I agree with that. But I think we're getting there.
First slowly and then suddenly, or however the saying goes. But look, all right. At this point, I want to thank everyone for the attention.